Friday, February 25th, 2022, Maneco 64, home of alternative economics and contrarian views. We're going to get back to economics today and inflation because I think it's something that's probably gone off the boil a little bit, if you know what I mean. There's a lot of distractions out there. But we're going to look at how inflation, in my opinion, and its consequences, of course, are still the biggest threat to our general well-being, to the prosperity of the general public, not only in the West, but especially in poorer emerging market countries. Before I start, I'd like to thank all of you, of course, for supporting my channel, for having an interest in what I have to say, for participating, for commenting, and also, especially lately, a lot of you have joined Patreon, and I thank you for that. And how it works with Patreon is that I don't make special videos just for patrons because I like all my videos to be public. What we do in the Patreon setup is that if you have questions that you don't want to be publicized, it's more personal, that you don't want it to be in the comment section, you can ask me through Patreon, and I'll do my best to answer those questions. And before we go into inflation, I like to go back a little bit with what's going on right now with Ukraine, Russia. I'm not going to make any political comments of what's going on. I'm just going to talk about the financial aspect of it. And you decide who's right or wrong, the West or the East. That's for you to decide. But I think I spoke to you about a friend of mine. Actually, when I started working in London, I worked with him, and he called me the other day. And as I said, he's a bond guy, but he's bought some gold. Actually, for the first time, he's actually bought coins, physical gold. And of course, I've been talking to him for years about doing that. And he had bought gold, but it wasn't physical. And he finally decided to do it. And he also told me that he got out of some bond investments he had, like over a week ago, Russian company, Eurobonds. And he was telling me how those prices dropped, you know, and that right now you can't even trade. People, market makers won't even make a market on it. But the other thing he told me is that a lot of the Russian foreign debt, like corporate debt, a lot of the banks now, for example, there's a story here about UBS. They are basically being told by up above that clients that have, let's say, $1 million worth of some Russian corporate bond, that corporate bond will be worth 0% in terms of margin. So if they're using that as collateral, they're going to have to put up some other kind of margin. They're going to have to try to get out of that, and that's UBS. I'm not sure how big the corporate issuance for Russia is outside in the international market, but it could go into the hundreds of billions, maybe even a trillion. I'm not sure. I haven't found the data. And what that means is that a lot of the banks in Europe, especially the major too big to fail banks like UBS, they could be imposing the same rules, and it could hurt everyone, because it could create a liquidity vacuum where a lot of people, not just wealthy Russians, but international investors that have Russian investments, they might have to sell other things. So that's a problem. And we saw yesterday a lot of the major European banks, they were down like 5, 6, and even more than 10% in the case of the German banks. And the other thing, and am I defending wealthy Russians or oligarchs? No, but I think they're concerned right now because a lot of their assets in the West, especially in the US, are going to be frozen. Financial assets, paper assets. And then we look at Canada, what's happened with people's bank accounts, financial assets. And by financial, I mean assets that you place with another financial institution, that there's a counterparty risk. So what I'm trying to say here, yes, some of these people are going to be ruined, but especially the wealthy Russians. But if they have something outside the system, like a little bit of gold and silver, they'll be able to keep going and start again. And I think this is a lesson for everyone to learn, not just wealthy Russian oligarchs, because we're seeing that it can happen in Canada, it can happen in the UK, it can happen in the US. They could freeze you out of your financial assets. So I think that's a really important message that I have to put out there. And it's for you to decide what to do, of course. And before I go into inflation, just wanted to show you here this German government international 5.5% loan, 1930. And it's a gold bond. And it was due, the bond was due in June of 1965. So very, the period from 1930 to 65, in between there, we saw a major war and major mayhem in the world. So what happened to this bond paper? Well, I bought this on eBay, by the way. The coupons were paid until December 1944, actually, because I've got proof here that the coupons were clipped. But after that, after the war finished, yes, they still paid it. And these are international investors. In this case, you could get take your coupon to JP Morgan in Manhattan. And then in 1965, they're supposed to give you back $1,000 in gold. Well, by 1965, there was no gold left in the domestic U.S. system, because there was in 1930, but in 33, they confiscated it. So what I'm trying to say here, they can do anything with paper. And I think we're entering a period similar to that right now. So inflation, as I've said many times, and I've learned this, of course, from researching, from reading a lot of books. And there's a lot of very wise people who talked about inflation in the past. But I like to reference Felix Sommery, the man famous for being the Raven of Zurich. And I recommend that book. You can get a free PDF online. The book itself is very expensive. Felix Sommery was one of the major, one of the most influential bankers in the even during World War II, post-World War II, but also during World War I, one of the major influential bankers in Europe and the world for that matter. And in the memoirs of Felix Sommery in The Raven of Zurich, he said, the state alone is responsible for inflation. And I'm paraphrasing him. And he said, inflation against government is impossible. So what he was trying to say is that it's the central bank and the government that create the inflation through money printing, through borrowing. And by money printing, I mean the central bank monetizing the debt that the government issues. And we've had plenty of that. And the consequence, of course, of that are rising prices. We fall into the trap of looking at CPI as inflation, and we're told, oh, inflation went up by 6%. No, those are prices. And also the mainstream mainstream economists, mainstream governments, even the bankers, they say, wow, inflation went up because oil prices went up, or inflation went up because holiday prices went up. And none of them tell you the truth. And why is that? Well, because inflation is the worst kind of tax. It's a hidden tax, and it helps, of course, the bankers and government. And they want to keep inflating without you realizing they're doing it. It's basically theft. They're stealing the purchasing power of your work, really, of your efforts, because your work and efforts are paid via the currency. And that's what it's all about. And the consequence of that inflation are rising prices that not just in assets, but now we're starting to see it in consumer goods, in services. And they're going to tell you, oh, it's because of the supply chain. But I just want to show you the Fed's balance sheet, because they're saying that they're tapering, and they might be a little bit. They're saying that they're going to raise rates in March. And as you can see, they're far from tapering. Since the end of last year, they've printed or created another 171 billion or so of reserves. Rates are still at zero. And as you can see here, the consequence of inflation is all around us. We've had CPI above 4% since May last year, and it's going up, and they haven't done a thing to stop those rising prices. And they're going to blame everyone, everything but themselves, and that's the central banks and the governments. And I think what's happening now geopolitically is going to be used again. As I said yesterday, CBS now is saying that inflation has been created by the Ukraine crisis. But no, the inflation, really bad inflation, started back in August 15th of 1971, when the other day I said President Nixon, closed the gold window, and technically it was him. And someone commented, oh, it was the Rothschilds, the bankers. Yes, it might have been the bankers telling them to stop the flow of gold out of the system. But be as it may, it was Richard Nixon who made the announcement. Ever since then, the currencies of the world have been detached from real money or gold or something that has had a stable store of value. And that's why we've had rising prices since then. That's why house prices seem like they've gone up. No, it's the currency that's gone down. This house that I'm in was here in 1928. It hasn't changed. It's only the currency that's gone down. That's why it seems like it's worth a lot more than it was then. So, to agricultural commodities. So I know food prices and shortages have been around for over 12 months, but if I told you I think it's going to get worse, it's not that I want people to suffer. It's just that I'm looking at it from the numbers and the charts. And the Rogers International Commodity Index, agriculture total return, is telling me that things could get a lot worse. And Ukraine and Russia are kind of breadbasket countries for wheat, corn, and other stuff as well. And look at the Rogers International Commodity Index. Yes, it did pick up from 2020, but then it paused. Let's see, and there was a correction last year, but now it's picking up again. And this is a bad sign, and especially for emerging market countries whose currencies are quite fragile and who don't have enough dollars still used as the reserve currency. So what I'm saying here, yes, when you hear the mainstream media, and hopefully you don't watch the mainstream media. I don't. I see clips of it sometimes from the people I follow on Twitter. But yes, it's a total propaganda machine. When they tell you, well, the food prices are going up because of the Ukraine crisis, because of Russia, because of energy prices. Well, think again. It's not really the food prices are going up. It's the dollar and all fiat currencies that are sinking because the central bankers are inflating like mad. And I think they're going to use this as an excuse as well to inflate, to keep inflating and not reverse their inflationary policy. We heard someone from the ECB yesterday say that they might have to rethink the withdrawal of stimulus. I think even Mester from the Federal Reserve said something to that effect as well. Let's look at the markets now. Enough of inflation. And when I say the consequences of inflation, of course, it's the rising prices, the falling currency. So it's 5 to 9 a.m. London time. When I spoke yesterday, I think gold was at 1944. It had been to 1949. Silver was just above 25. And it was a major breakout. And I think it still is a major breakout. It just depends on the time frame that you look at. In the short term yesterday, there was a major breakout. I know things came back quite a bit yesterday. But if you look at this monthly chart of gold, it hasn't really changed. It's still breaking out. And what do I think happened yesterday? A lot of you are going to say, well, it was manipulation. They're not going to let gold go up. I don't think so. I actually think there might have been a little bit of paper selling on COMEX by the bankers. But after I finished my video yesterday, gold still went up another $30. And we got up to the next resistance around 1970, which I spoke about in the video. And I think the high was 1975, and it turned around and kept going down. And after 1:30 p.m. Eastern time, which is the closing of the regular hour COMEX trading, so it keeps trading, but it's thinner. That's when gold really dropped through 1900. And so we tested the 1920, was important resistance, became support, and we broke that. And then we tested the other level, which I spoke about yesterday, which was the 1875, 77 level. And lo and behold, the low yesterday was 1877, but we've rebounded right back up. So technically speaking, that's a really strong move. That gold spiked up to 1975, came back, retested 1920, 1875, and it's come right back up. Right now we're at 1912. We're up about $8. The high's been, not surprisingly, 1922, so that 20 level there and the resistance. The low has been 1901. Silver, again, I said there's a lot of water still to run under the bridge until today. I said tomorrow, yesterday. And yeah, I think we went down to 23.80, but right now we're at 24.25. We're up about 3 cents. And yes, I think if we can close above 24.50, which is the high overnight, that would be very positive. The low's been 24.13. And the stock market as well. I'm not surprised it rebounded. It was down massively in the morning before the open, the futures. But right now, we're down 350 in the Dow, down 1%. NASDAQ is down 1.2. S&P 500 is down 1.1%. The FTSE is up 1% at 72.92. To the currencies got hit hard versus the dollar. but they rebounded a little bit. Right now, sterling is unchanged, 133.75. Euro is down 0.2 at 111.70. The dollar is down 0.2 versus the yen at 115.29. And the dollar is down 0.1% versus the yuan at 631.60. Aussie dollar is up 0.33%, 71.88. The dollar is unchanged versus the Canadian dollar, 128.04. And the Kiwi dollar is up 0.1 at 77.00. To the general commodities, WTI crude is up 1.5%, 93.70. High-grade copper is up 0.2% at 446. U.S. nat gas is down 3% at 449. And to finish off, a look at the 10-year yield. The 10-year yield is down 3 basis points at 194. The 2-year yield, though, is up 2 basis points. So that's a little bit of curve flattening there. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.